The disconnect between the banking community or the banking sector and the business community is something that everyone is also worried about. What can be done? Do we have low-hanging fruits at all for the CBN to tap into, to be able to support the fiscal side, obviously, to achieve inclusive growth?
It's a very tough call, I will say, at this point in time, given not only the challenges that, are facing our economy, but also the recent antecedents. So cutting over from a particular pattern or direction we've been going to where we intend to go now, we bring some difficulties and challenges and discomfort as well. So the real issue for us is going back to the basics, like I said, there's always the traditional, we call it that, we might also use the word primordial, trade-off between different plans to macroeconomic management. You want the economy to grow and also grow inclusively. That's one objective. At the same time, you want to have moderate rate of inflation. But here you are facing a situation where there are some factors driving the inflation rate that appear to go beyond what a monetary policy instrument can effectively address. But typically, if the central bank will stay within its own mandate, what we may then think of is this: inflation rate latest data available for October 2023 at 27.33%, then coming back to monetary policy rate at 18.75%. We also suggest to CBN that in order to clip the wing of inflation, that monetary policy rate, MPR, needs to be increased in order to close the gap. Closing the gap means then that we want to reduce the extent of negative interest rates that investors are looking at as a disincentive on the one hand. Now, when you come to the business community, because I'm splitting those two, for those who borrow to do business, NPR at close to 20%, of course, is a signal to banks, that is commercial, merchant, investment, whichever category, to keep their own rate above that NPR, that is to provide for a margin and all the things required in running a bank profitably. In which case, they will be lending at anything above 20%. Okay? If that is the case, it means then that borrowing for business is expensive, and that brings cost pressure on businesses. So there is therefore a kind of trade-off there. If the rate goes up, it brings additional burden on businesses, and therefore escalates their cost of doing business. But on the other hand, CBN is looking at its own major responsibility, which is inflation targeting. So if we are targeting inflation, the one that also suggests that we should increase the rate in order to take the wind out of inflation that keeps rising. So given that, it means the CBN governor has a tough job to make. And that tough decision is, which one should it pander to? Should it pander to the orthodox approach of working towards a positive rate of interest, or pander to the fact of an economy that is desperately in need of growth, looking especially at the data that came out today from National Bureau of Statistics? Our economy grew in the third quarter by 2.54%, which means if you take a straight line average of the growth rate for the first 3 quarters of this year, you are looking at about 2.4533 recording. So which means the economy is not growing fast enough. So in which case, CBN will be looking at that also. If we want to pander to growth, probably to leave the NPR where it is. But if we pander to the orthodox monetary approach to dealing with inflation, then it will suggest that we raise the rate. So it's a very tough call at this point in time. So the best we can then do is look at what other considerations the governor will assign more weight to in deciding which direction to go.
Really not the best time to be a CBN governor, I must say. But let's look at our reserves. Dr. Adedipe, please, you need to explain to us here. Before now, we used to think it was about 33 billion US dollars, but we've come to reality to see what is on ground, that the CBN cannot even support the FX market like they used to do. Research shows that about $17 billion was used to defend the Naira in 2022, about 1.4 billion Naira every month. We cannot continue that at the moment. So what do you make of our reserves? Where do we go from here?
Very good question, I will say. And it's also good you raise this because we look at the issues around external reserves. Number one is that when you talk about your external reserves, it is the outcome of surpluses in your past trade and investment and borrowing relationship with the rest of the world. In which case, if you have, let's say, a surplus in your balance of trade, which means we exported more than we imported, that gives us a surplus. If we have a similar thing play out in the, the debt window and also the investment window, then we probably will have a surplus balance of payments. That brings an accretion to reserve, which means on an ongoing basis, our interaction with the rest of the world will determine whether we're adding to our reserves or taking out of it. So for me, therefore, in interpreting that, it is not so much as a concern that CBN is putting out money into the FX market, which some analysts interpret as defending the Naira. And I always challenge that assumption that if the CBN doesn't defend the Naira, should it defend the dollar or pound sterling or the euro or any other currency? Every reserve or central bank around the world defends its own currency. How do they do that? So that now is the real issue. Within which framework? Do they do that in a market where the central bank fixes the rate, or where the central bank says, let the market determine the rate, and then we will intervene when it becomes necessary? If from our own, the data and information we have available at central bank, there's a pointer that the Naira is weak, then it means central bank will take actions in order to strengthen it. That is what they commonly refer to as defending. But if the Naira is perceived to be strong, then we want to do something to temper that and also make it to depreciate in the market. So in which case, central bank will either buy or sell foreign exchange, depending on what they estimate the position of the national currency is. That's on the one side. Now, the other side to it is that as you are taking from the reserve to intervene in the market, you are also, I'm now bringing those two issues together, you are also receiving additions to it, which I called earlier accretion to reserve. So in which case, if you look at our external reserves in the last 11 months now, let's say up to date, you find that the decrease in that figure is not anything significant as to warrant an emergency, so to say. So the other side to it is now what you said earlier. And there are obligations that have matured, but we are yet to extinguish. So we take note of those, and then we back it out of what we see today. If we go to the website of the Central Bank of Nigeria, about $33.something billion. Now, so if you look at that and back out the matured obligations, that gives you what is available, contrary to the common refrain that we have only 3 billion, which is incorrect. In fact, we call it dubious analysis. Okay? So the real correct analysis is what obligations have matured, forward transactions that have matured, which ones are they, which ones are authentic and confirmed. That's on the one side. Is there also, like we have heard, that the central bank borrowed money and used part of our reserve as cash collateral? Okay, what does that mean? When you back that out of what you see today, then it means you have a portion left that you now compare with your trade figure. In which case, we look at our imports bill. What is the average import bill per month? Then we use that figure to divide the external reserve that is available. That is to say, the liquid portion less those matured obligations. If you check that out today, we are looking at about 8.25 months cover. Minimum required to guarantee stable exchange value of your currency is 6 months, especially when you are not running an economy that is in crisis. If the economy is in recession or in depression or slump, as we call it in economics, that is when you can now say, okay, that minimum cover should be not less than 11 months. So the argument then is that Nigeria is a going concern in the sense that we are still selling and buying from the rest of the world. So it would be wrong, therefore, to take all obligations of Nigeria and back them out of our external reserves. What is correct to be backed out will be the matured obligations. So if you do all that, it means we are not in a crisis from that perspective. So the real interpretation of the crisis we face today is speculative attack. And that is why we have a currency crisis. Speculative attack, of course, which speaks to the policy we have right now, unified exchange rate. So in my own view, that is an area I expect the central bank governor to talk to. Now, we've adopted that, which means market interaction between demand and supply for foreign currencies will determine the market planning price, that's the exchange rate we deal with. on a daily basis. Now, if the market does that, it means that CBN is no longer fixing rates or intervening with respect to price, but intervening in terms of selling or buying, as the case may be. So if that is the position that CBN will continue to take, that means we likely still see further adverse movement in the value of the naira. And why do I say that? History, on the one hand, the recent one, that is looking at when that policy was adopted mid-2023 up until date, there has been no improvement in the supply situation in the FX market, which means unified exchange rate is not enough as a policy tool to increase supply in the market. So that is very clear from the recent data. Then when we look also at history, especially occasions where we also adopted this kind of policy, and I make reference to September 1986, then March 1993, and then June or July 2016. If you look at those dates and come back to where we are today, you find that the difference between those dates when we did that and November 2008, when we did a similar thing, is simply that in 2008, our external reserves was very strong. So we were able to contain the exit of foreign investors on the one hand, and also obligations that were maturing that we had to extinguish. But in those other dates I mentioned, the pocket was very lean, which is what we are facing today. So I expect the CBN governor to also say something about unified exchange rate policy, whether it is something they want to sustain, or we'll be looking away from that now and say, look, let's stay where we are and now look at issues relating to supply. So, but of course, these are the things I expect him to also speak about.